Alright, so I know a lot of people have been talking about this stock, especially after Meet Kevin mentioned them as a stock to sell. Then an analyst from JPMorgan downgraded them as well. So in this video, I'm going to respond to what their thoughts are, as well as give my thoughts on their current valuation and see whether or not this is the end for Shift Technologies or not. So if we look at Shift over the last month, we can see that this company has gotten absolutely destroyed by going down over 40%. Now, while all this was going on, the company beat on revenues, EPS, and increased their guidance. So there's a lot of frustration that is coming out of investors as to why this company is valued at the price that it is. So Meet Kevin ended up talking about this stock on November 20th. And I'm going to go forth and say that his analysis that day was lazy. Now that doesn't change the way that I think about him, but he didn't say much about this company at all. His phrasing was extremely short-term focused, and that led to a brief description of the sector of the company rather than the company itself. He hasn't really done an update on them in forever, and that's part of the reason why I think that he needed to give an explanation for the price to be going down. But the first thing that he mentioned was the used car shortage. So there are a couple issues with this statement. First, the lack of new cars that are hitting the market is what is causing the shortage. And who are the people that are most likely going to be affected by this? It's going to be companies that sell newer cars like Carvana. Shift will buy and sell cars up to 10 years old, unlike their competitors. So they have a lot more opportunities to buy cars and not be affected as much by the shortage. The other thing about the used car shortage is companies that do a lot of wholesaling are the ones that are actually getting increases in their prices. Shift is known for buying and selling directly to consumers. And even though they do some wholesaling, their competitors do way more wholesaling than them. The second thing that Meet Kevin was talking about was their advertising. And he was saying that it doesn't matter if you increase your advertising but don't get the sale. Now, yes, this is true, but you need to get people knowing who you are as a brand. If nobody knows that your company exists, then they won't go to your website to see all the different inventory that you have. Shift has accelerated faster than their competitors when it comes to their website traffic. So now more and more people are figuring out who Shift is. And let's keep in mind that right now, they're only in the West Coast and Texas. So what do you think will happen when they start expanding their hubs over to the East Coast? Now, one of the issues that I've seen people have in the comments below is based upon the amount of debt that they have, they're going to be burning so much cash that they won't be profitable anytime soon. So I want to do a quick comparison to Carvana as to when they had similar revenues that Shift has right now. If we looked at when this occurred back in 2017, Shift actually has a 30% higher GPU or gross profit per unit, which is huge in comparison. They also had faster growth rates than Carvana did as well. But if we bring everything all the way back to today, we see that Shift actually has a better current asset to liabilities ratio than Carvana does. Carvana has a bunch of debt, and they don't have enough cash to pay it off right now. Shift, on the other hand, has enough cash to where if they wanted to pay off all their debt right now, they could. Carvana has a current price to sales ratio of 2.61, whereas Shift has a price to sales ratio of a 0.27. That would mean that if Shift had the same price to sales ratio as Carvana, Shift should be valued at $34 a share. If we put the fundamentals of the company together with a large range of cars to buy from, the increase in website traffic, and an increase in their guidance during a used car shortage, I don't see how this company should be valued at the price that it is. Now, there is one more thing that I wanted to mention, and that was that JPMorgan downgraded this stock. Analyst Rajat Gupta said, though brand positioning and execution at Shift Technologies has been relatively better versus Vroom, Shift is not immune to labor constraints coming in the way of scalability and thus re-rating in shares. There remains a high degree of capital needs near term, which is likely to remain an overhang in the current environment. Okay, so I got a few things on this because I'm skeptical. First, even though Vroom and Shift are in the same sector, there should not be a comparison when it comes to their execution. As I've said in my previous videos, Shift has way better reviews than Vroom does, and they also have faster overall growth. Saying that it's relatively better makes it seem like he was already pessimistic about the company. Second, the labor or capacity restraints that he's talking about is kind of ridiculous in my opinion. First, the company is moving into a much larger facility here soon in the Bay Area, where it will be 2.5 times larger than what they currently have. It is also important to note that Shift is planning on doing a whole lot of hiring in this next quarter, and that could affect EPS in the short term, but I think that is really going to help them accelerate going into 2022. Even though Shift admitted that the market for hiring is a little bit difficult right now, they're going to be hiring over multiple locations, so I don't think that it's going to be that big of an issue. But here is what I find interesting. Initially, JPMorgan put this company as an overweight with a price target at $12 on October 5th. Now, since October 5th, this company has gotten absolutely destroyed by going down over 40%. I think that a company or an analyst doesn't want the reputation of getting a stock wrong. So what they'll do is they'll downgrade the stock, and if it goes up above that price target, then great, rather than them setting a high bar and it not meeting expectation. Now, some of you have talked about Shift needing more capital going into 2022, but there has been recent news that Shift is receiving $100 million in floor plan financing, and that will allow them to increase their inventory without diluting shareholders or burning more cash than normal. Ally Bank is one of the top banks in the world right now, and they wouldn't be lending money to Shift for a 2-year term if they didn't expect to get that money back in that amount of time. But here's what I'm wondering if you are still nervous about this company diluting shareholders. If you were a company that diluted shares, and let's say that the value of those shares went down 25%, that would be drastic. But what if the company ended up doubling their revenues and doubling on gross profits? Do you think that it would still be worth it? Now, I know a lot of you are probably thinking that they won't be able to raise a lot of cash, especially at the current market cap. And my answer to that is you're right. But the reality is the company doesn't need that money right now. This is more of a concern for Q1 and Q2 of next year. If they're still burning a lot of cash, the share price hasn't gone up, and there's no sight at profitability. Lastly, Shift wouldn't be doing all this hiring in this upcoming quarter if they didn't think that they would be able to have enough cash going into 2022. If they did have these concerns, they would be much more focused on trying to get to profitability as soon as they possibly can. So my question to you is, do you trust that the management team knows what they're doing? Do you believe that they're going to be able to handle all the unbelievable growth that they have and then start transitioning to becoming profitable? If so, then I think that there's nothing to worry about, especially at current prices. Personally, I've continued to add to my position, and I will continue to add if this company remains in the $3 to $4 range. But I hope you guys enjoyed this video. If you don't mind, would you consider destroying that like button that helps this channel immensely, as well as comment down below what your thoughts are on Shift Technology's current share price, as well as the new news that has just come out. And if you are new here, hit that subscribe button down below. That way you are notified when new content comes out. Hope you guys enjoy the rest of your week, and we'll see you in the next one.